Key factors that determine movement of stock price. Before we look into the key factor, we need to understand the concept of marketplace. Place where the buyers and sellers' demands are met at a location which determines the price for the specific product, where the buyers and seller will not have exact idea how the price behaves. For example, there are a couple of oranges which has got the same set of quality, one is sold in shopping mall and other is sold by street vendor, belong to same location, and now over the buyer will decide based on location and other factors. For example, hygiene and buying power will determine the sales. Similarly, over there the same happens with the financial instruments like equity share, debentures, bonds, commodities, etc. Key factors that determine movement of stock price. Number 1. Demand and supply. Demand and supply. When buyers for the shares are higher than the sellers, the share price increases, and when shares are sold, the stock price starts to drop, which increases stock volatility. Number 2. Interest rates. Interest rates. In case of lower interest rates provided by bank and other financial institutions, demand for funds from public, companies, shareholder, etc. will increase. Subsequently, the demand for shares also rises. On the other hand, high interest lowers the demand for funds and the demand for shares is lower. Number 3. Dividends. Dividends indicate the movement of share prices. When companies make dividend announcements, the share prices of such companies are likely to increase. It is important to note that if the dividend rate announced is lower than the investors' expectations, share prices decline, while if they are up to more than expected, share prices increase. Number 4. Investors. Investors, market players, have an impact on share prices. With more bulls than bears, the prices increase. With more bears than bulls, share prices decline. When the market is going down, we love to be a buyer. When the market is going up, we love to be a seller. It happens when buyer is happy with amount of profit and share gain he has attained, he sells it, or he may be a speculator or a short-term investor. Number 5. Management. Management profile has a significant effect on company success and stock prices. If management consists of experienced professionals with a proven track record, share prices are likely to be higher. If the management that takes over a company lacks integrity, share prices tend to fall. A change in management or new strategy implement are brought down the goodwill of the company. Number 6. Economy. Economy. Fluctuations in the economy feature what are commonly referred to as booms and depressions. Under favorable conditions, share prices are at their peak and their lowest point is experienced during depressions. Share prices gradually rise during recovery and fall during recessions. New government policies implement brings in drawback for the company. Example, if tax payment for products increased, naturally sales of the products drops. Number 7. Political climate. Political factors that range from relations with other nations to government policies can affect share prices. Number 8. Short-term and long-term investors. Short-term and long-term investors. Different investors rely on different factors. A short-term trader or investor is likely to prioritize and incorporate technical factors such as inflation, trends, and demographics. Long-term investors focus on fundamentals like earning power and acknowledge the crucial role that technical factors play. Investors who prioritize fundamentals can integrate technical factors. Considerations. Stock prices change for various reasons. While some people believe that it is impossible to predict the changes, whereas others think that observing past price movements and charts can determine when you should buy and sell. Thank you for spending your valuable time with us. If you like this video, like it, share it, and do let us know your valuable feedback and subscribe to Let's Foster for Better Future.